As of the end of the quarter, on March 31st, this is the 5-year anniversary since the COVID lows. I was planning to write about how a globally diversified portfolio is up about 102% since those days. I was also planning to write about how small value has absolutely crushed since that time, being up 204%, vastly outperforming the S&P 500, which is only up 133% since that time. I was planning to write about how international stocks have outperformed this year with an 8% return versus a negative 4% for the S&P 500 as of March 31st. That, best of all, as of March 31st, a diversified investor is doing just fine with narrow losses versus a 4% loss for the S&P 500. But then on April 2nd, Donald Trump announced some of the biggest tariff increases we've ever seen. I'm reminded of the quote that there are decades where nothing happens, and then there's weeks where decades happen. To quote the economist David Kelly, the trouble with tariffs is to be succinct. They raise prices, slow economic growth, cut profits, increase unemployment, worsen inequality, diminish productivity, and increase global tensions. Other than that, they're fine. So the markets, no surprise, have been reacting to this as if it was a second pandemic. We've had the biggest 3-day drop in the market since 1987, and we don't know the impact of what these will be, as in whether they're a negotiating tactic or the real thing, but we do know historically this is a very large change. In fact, I am worried that by the time this video rolls out, I'm presently recording on April 7th, things will already have changed, either for the better or for the worse. So how should we react? Should we sell? Should we move more conservative? Maybe we just put our portfolio in cash until the smoke clears and there's a little more certainty. Well, I like to think about it like you're doing all the right things. Imagine you're working out, you're eating right, you're taking all the right supplements, but you get the flu. Should you start switching over to cheese curds and cigarettes? I don't think those are actually going to help your health. The best thing to do is continue to eat right and exercise and take the best supplements and medicines that you know how. So the knee-jerk reaction is to go to cash, but instead let's talk about some of the ways we can run this to our advantage. So first off, we monitor portfolios here on a constant basis, and now might be a great time to rebalance. We've kept our bonds extraordinarily safe and they haven't lost any value. So now might be a great time to be rebalancing and putting money into the stock market. Second, a lot of you still have cash on the sidelines, and if you do, now's a great time to start to dollar cost average into the markets. If you're younger, now's a great time to continue to buy and to get excited about the lower prices you're seeing. If you're someone retired, you should know that you have a war chest which will enable you to get through at least a 4-year bear market. We can use this to reduce our taxes, either from tax loss harvesting, which we're going to be monitoring on a constant basis for you, strategically through Roth conversions, which we will evaluate during our financial planning meetings. I'm also reminded of the quote, all happy families are alike, but each unhappy family is unhappy in its own way. And it seems the same for bear and bull markets. They all just go up and it's easy to make money. But each bear market is a bear market for its own reasons. And each time it's different. In another sense, nothing important in our philosophy has changed. We see a 15% correction or so roughly every year. We even see a deeper correction once every 5 years or so, which would mean this one is right on schedule. Now, maybe the most important thing to remember is that with each correction, we don't know how they will resolve. I didn't know how 2008 would end or COVID, but perhaps the most important thing to remember is that we never know how any of these crises will resolve. We only know that they will. In 2009, I remember sitting around the lunch table with a group of other financial advisors, and we all asked, do you think the market will go down tomorrow? And around the table, every one of us agreed the market would continue to go down. It turns out that was the last day that it did go down. And on March 9th, the market rebounded when there was no good news, and the good news followed a few weeks later. Since then, it's up 892%. So an 892% return when we didn't know how it would resolve. A few years later, there was a debt ceiling in 2011, and we didn't know how that would resolve. Since then, the market's up 470%. In 2015, there was concerns about China devaluing its currency and a global economic slowdown. We didn't know how it would resolve, but the market's up 215% since then. Most poignantly, I'll forever remember a client who challenged me during COVID. They said, Bjorn, do you not understand what's about to happen here? I said, I think I do. And they said, do you understand there's going to be a massive recession? Yes, I understand that. Do you understand there's going to be massive layoffs? Yes. You know government debt is going to spike? Yep, I think that's true. Do you not understand lots of people are going to die? Yeah, I think that's going to happen too. And don't you think it's going to take a long time before things get back to normal? Yes, I do think that's going to happen. And then the client asks, so why, given all of those things, should I stay invested? And the only reason you could come up with is simply that that's what works in the long term, and that's what worked over and over throughout history. That paid off right away, and that's exactly what happened. The market is up 107% since that time. Even in the midst of panic, the best philosophy, when you can't see the way out, is to continue to invest and stay the course. Corporations are always adjusting, and markets are rebuilding already. They're going to hire lobbyists. They're going to change their corporate strategy. They're going to do whatever it takes to make you money. The markets and the corporations are already doing the work. Let's let them.